Some know him as Uncle Cody, and some know him as Citizen of the Year. But today we'll be going over his entire dividend portfolio, all of his stocks. I'll go over it, try to give any feedback that I can, what I'd like to see more of or less of in the portfolio. If you're new to the channel, this is a series where I go over subscribers' portfolios and my friends in the investing community and other channels alike. I, of course, want to thank Uncle Cody for being completely transparent and sharing his entire portfolio, which he also does on his channel, link in the description. Unlike a lot of other finance channels, it shows a lot of courage to show transparency. With all that said and done, my name is Ryan. I'm 17 years old. I do dividend growth investing for the long term. Come be a part of the journey and subscribe. I make my own portfolio updates, news about dividend investing, and more. And of course, with all that out of the way, buy, stash, collect cash, and of course, roll the intro.
Hello, I like money.
And hey you, right there, do you want me to go over one of your portfolios? Join the Discord link in the description and message me from there. On to the video. The first holding in his portfolio is Vici stock, ticker Vici. It makes up 1.63% of his portfolio, and I'm already liking the allocation that I see right now. When you think of REITs, you really don't think of dividend growth, but Vici is actually probably one of the top dividend growth REITs in the stock market right now. They also do have a very solid dividend yield sitting at around 4.5% right now. Vici has some of the most valuable real estate in Las Vegas and the most valuable golf course, which I recently just figured out. Vegas is one of the fastest growing cities in the world right now. Vici is not only just concentrated in Las Vegas though, they are also diversifying across North America. Vici has a lot of valuable properties that are some of the most desired properties in America. Overall, I'm very confident over my lifespan at least that Vici and their properties will thrive. I'm also very happy that they are diversifying into more higher quality properties across North America. Next, making up 1.75% of this portfolio is the trash company Waste Management. Waste Management is a recession-proof company, and there's always going to be trash in the world. Take a look at some members of the finance community. There always will be trash in the world. Waste Management is just such a staple of a company, and it's pretty much guaranteed that they're going to be around for the next 50 years unless Amazon makes, garbage trucks or something. It's definitely a recession-proof company with a lot of monopolistic features. Unfortunately, though, that does come at a premium price as they trade at a very high PE right now and never seem to be on a dip. Me personally, I only unfortunately own one share of Waste Management, which was one of the first stocks that I ever bought in my portfolio. I really do need to buy some more, though. Next, making up 6.08% of his portfolio is ARCC. This is Ares Capital Corporation, and to be honest, I'm not a huge fan of this one. To be completely honest as well, I didn't know much about this company, but after kind of taking a deep little dive into the fundamentals of the business, it's just not my type of holding personally. They don't have amazing dividend growth. It has very poor returns over the last 5 and 10 years compared to the overall market, and just doesn't fundamentally seem like a very sound company. So I'm very curious to see, and Cody I'm sure will be in the comments as well and respond to these questions, but what's the investment thesis there? I just personally wouldn't see it holding as a long term. Maybe it's a short term value play. Cody probably knows something that I don't about Ares right now. It is currently trading at a 7% dividend yield, so a little worried there that it could be a value trap. Just me personally, though, it's not my type of holding. Next, he has 68% of his portfolio in cash, which I admire. It is just something that I could personally never do. I personally just love buying and consistently adding to my portfolio and buying stocks, seeing my dividend income grow over time. Just personally, it's something that I could never do. With that said, 68% cash tells me that Uncle Cody is very patient and very picky with his buying opportunities, something that I am definitely not. From that alone, it probably tells me that he thinks a lot of stuff right now is overpriced, which I can't really disagree with. Next, he has 6.4% of his portfolio in the Dividend Growth ETF. Definitely approve of that as a long-term holding. Any Dividend Growth ETF like SCHD or DGROW, I am definitely in approval of. Next, making up 5.3% of his portfolio is Divo, the other dividend ETF. Uncle Cody is a big fan of the dividend ETFs, which for him is definitely the smartest way to go. Obviously, it's been proven over a long period of time. It is better to just invest in a pure basket of ETFs and a basket of companies rather than picking individual stocks like me. Definitely another approval by me. Next, we have 5.21% of his portfolio in PayKG, which is Packing Corp. If you watch Cody's videos on Packing Corp, you know that they're responsible for making boxes in America. Boxes are obviously used across the world. There's never going to be, a shortage of boxes at a time where people don't have a demand for boxes. So this is definitely a very interesting holding that I don't think a lot of dividend investors have really thought about. They have a very solid dividend right now with very strong growth rates, but they have pretty poor performance over the last 5 years of just up around 5%. I do like this holding, but with that said, I would rather see it in a more monopolistic company that's an industrial, maybe like UNP or Canadian Pacific. With that said, I do approve of this holding. Next, he has 4.31% of his portfolio in everybody's favorite dividend ETF, SCHD. I'd like SCHD personally in the 7 to 10% portfolio, allocation range. Personally, I have it making up 10% of my portfolio. But he owns a ton of different dividend ETFs, so it would make sense why it's a smaller portion. And then lastly, at 3.92%, he owns X Yield, and I have no comment on that. I just hope that he's not holding it long term. Personally, I am just not a big fan of the global X, ETFs and income ETFs. I just don't personally understand it. I'm sure PK investing is going nuts at me right now. Right now, when I'm buying and looking to add stocks, I plan to hold these stocks forever and just let them compound. And if I'm buying a stock and I'm planning to only hold it for maybe a year or two with most of these income ETFs, I just avoid it in general. I'm pretty sure this is a short-term holding for COTY too. The same could be said for me with Altria right now, but the thing with Altria is I actually think that it's, fundamentally a very strong business, and that over the next 10, 20 years, I think that they will be fine. They have a good business, very good pricing power, and a very addictive product, and they reward shareholders very well. So personally, I'm avoiding XYield and QYLD. Those are the ETFs for COTY's portfolio, and now let's get into the bread and butter. Here are the individual positions. To start off, making up 1.89% of his portfolio, we have PepsiCo. Pepsi is a great company, but it's just ridiculously priced at the moment. I think that they are better than Coca-Cola. I'm sorry, Hiram. I love that their dividend growth has been very strong over the last few years. And again, with a lot of these companies, very strong company, very bad valuation right now. Speaking of great companies with very bad valuation, next we have Procter & Gamble making up 0.98% of the portfolio. PG is an amazing staple, but again, great brands, great pricing power, etc. Just crazy, outrageous valuation. I will pay a fair price for them, but not a premium. Next, we have QQQ making up 6.44% of his portfolio. I like this position a lot. Great diversification and great growth. And then we have QYLD making up 1.43% of the portfolio. As I kind of mentioned earlier with these global X, income ETFs, I hope it's just a short-term position to fuel other positions in the portfolio, get more capital into the portfolio for more higher growing long-term position. If that's the purpose for it, then I'm fine with it. Now we have, I believe, a senior retirement REIT, which is RITM, which makes up a whopping 0.09% of this portfolio. Don't know much about this. Next, he has Starbucks making up 1.63% of his portfolio, which I am definitely fond of. Starbucks has been on a bit of a dip recently, and as the Starbucks fanboy that I am, if it gets back in the low 90s, high 80s, I will look to be adding again. I already own enough Starbucks and have a lot of gains, but it's definitely a company that I would look to add to long term. Then in this portfolio, we have more SCHD making up 2.22% of the portfolio. Then we have SCHEL making up 1.03% of the portfolio. To be completely honest, I'm not a huge fan of this position. I just don't see the long-term growth compared to overall market. It's severely underperformed the overall market, and it just doesn't seem like my type of stock that would be a qualifier for my portfolio. Not great growth. Then he has SoFi making up 1.35% of the portfolio. I have no comment on that position. I don't know if we're trying to get our Vici position up with all this gambling in the portfolio. Then he has 0.04% of the portfolio in SPY. I'd like to see a little more of the gambling money in this portfolio put to SPY. He has 3.07% of his portfolio in UNH, which is United Healthcare. They actually had a really nice dividend hike just recently, around 14%. So obviously that's a big thumbs up for me. Very solid dividend growth position. A very solid, company overall. Definitely a stock that I'll be personally researching in my free time. Finally, it looks like we got out of the Vici casinos and we're finally investing in some quality companies, COTY. We have 2.5% of the portfolio in Union Pacific. I am very fond of Union Pacific, and I'm looking to make it a core position of my portfolio long term. They basically run a duopoly with Canadian Pacific on the railways. Quite frankly, it is impossible to compete with them. I never truly realized how much railroads take, how crucial they are in, transportation and trade. If the railroads collapse, we're basically all doomed. Next, we have 2.87% of the portfolio in Visa, which puts a big grin on my face. Visa, again, like Union Pacific, they run a duopoly with MasterCard. Such a financially sound company, Visa really is. It's one of my favorite positions that I have in my portfolio right now, in a core position. Visa and Union Pacific's dividend growth is also stellar as well. These two companies are like Warren Buffett's wet dream. Then he has 0.62% of his portfolio in a Vanguard VHT. I'm liking this ETF exposure as well. There's just so much diversification in this portfolio, and it's very admirable. If you guys want Uncle Cody to get rid of his bad stocks like SoFi, make sure to smash the like button. This video gets 50 likes, I will personally fly to Chicago and confront Uncle Cody on his bad holdings. Moving on, he has 2.03% of his portfolio in Johnson & Johnson. J&J's been on a dip recently, and they're a slow-boring company, and I think they're at a pretty attractive price right now. Don't count out me buying some. Next, we have JP Morgan. Now, I personally avoid bank stocks straight up because I don't fully understand the business itself. But if there were to be one bank stock that I invest in, simply because of the dividend growth and the way they reward shareholders, it would be JP Morgan. That makes up 2.52% of the portfolio, and I definitely approve. Now, making up 1.27% of the portfolio, we have Coca-Cola. I have heavily debated selling some of my Coke and putting it into Pepsi for some more equal balancing in the portfolio. Now, the personal side of me is a little concerned long-term because of Coke, because I'm going to be straight up and honest here, their products are not healthy whatsoever. But at the same time, America is not healthy whatsoever as well, and they're going to keep on buying Coca-Cola products. If Warren Buffett isn't selling, then I'm not selling either. Moving on, making up 1.55% of the portfolio is Lowe's. Lowe's also just had a recent dividend hike, and they've had very strong dividend growth over the last few years. Lowe's is definitely on the radar for potential additions to my portfolio over the long term for sure. Next, we have MasterCard making up 2.89% of the portfolio. MasterCard, just like Visa, very financially sound company. I like it a lot. Then we have McDonald's making up 2.24% of the portfolio. McDonald's is a really high valuation right now, but again, I think they are such a strong company financially. I own roughly $900 worth of McDonald's right now, and I only own 3 shares, and I haven't bought in a long time. I bought my first share of McDonald's at $190, which is just crazy to think, so I'm definitely opposed just waiting on the sidelines and waiting for a big dip to buy, because, obviously look at that. I could have waited for it to go to $150 to buy, and I'd be sitting on the sidelines right now looking like a loser. I think McDonald's is also going to really benefit from automation as well in the future, just like Kroger. Next, we have Medtronic making up 1.45% of the portfolio. I don't know much about that one either. Next, we have MPW making up 0.79% of the portfolio, and I'm sure Fiscal is going nuts right now, going bonkers, jumping up and down in his house right now. But MPW is really interesting because they're obviously kind of screwed over the shareholders and lied, but they are still paying that dividend, so it's an interesting position. I'm not buying for sure, just way too much risk for my, personal liking. It's just crazy how fast things can really turn 180 for a company. And it just goes to show nothing is guaranteed in the stock market. Next, making up nearly 4% of the portfolio is my favorite company in the world, which is Microsoft. I can make an hour-long video talk about how much I love Microsoft and how they're going to be the Netflix of gaming, etc., etc., etc. Monopolistic features, high-quality dividend, share buybacks, that's all I gotta say. Next, he owns NASDAQ at 0.92% of the portfolio. Can't go wrong with that in my opinion. Then he owns NEO at 0.6% of the portfolio. No comment on that one. Might as well just go to Vici and put your money there. Uncle Cody's gonna have a lot more gambling money next time he checks out one of the Vici properties in Las Vegas because of NVIDIA here making up 10% of the portfolio. Just crazy what happened with NVIDIA a few weeks ago. I'm personally very curious to see what he's going to do there. If he's going to, just sell out and take some gains. Me personally, that's what I would do. They mentioned AI more than 3 times in the investor presentation. What can I say? Next, we have Realty, not Reality Income, making up 2.85% of the portfolio. Realty Income's looking really appealing right now with their valuation near a 5% dividend yield, which is a historical high. I am definitely looking at Realty Income right now under $60. In my opinion, I think Realty Income is the better REIT than Vici, but I think Vici's the better REIT if you're looking for dividend growth. Realty Income's more stable, more consistent, etc. Then he has a tiny position in OTTR, which I don't know much about at all. Moving on, he has 5.65% of his portfolio in Apple. Just crazy to see how much Apple, overall sentiment on the company has changed since the VR headset. The Apple ecosystem and Apple's business model overall is just incredible. And a company that's been on the dip recently, which he owns some of, which is AbbVie, stock ticker ABBV. This makes up 1.78% of the portfolio. AbbVie's been dealing with some issues, the Humira patent expiring. Overall, though, AbbVie's such a huge company, I think long term it'll be fine. Next, making up 5% of this portfolio is Applied Materials, so I definitely approve of that position. I like that long term. Next, making up 2.19% of his portfolio is a company that's been, not too great recently, which is Amazon. Amazon is just a pure and crazy example of how fast investor sentiment can change of a company over a year or two. 2 years ago, everybody thought Amazon was taking over the world. Every industry was in trouble from Amazon. Walgreens was in trouble. Kroger was in trouble. Walmart was in trouble. Target was in trouble. Everybody had the Amazon threat. It was priced into the stocks. And look at it now. Amazon has their own issues that they're dealing with. With that said, though, I do think long term, though, still Amazon is a strong company to hold. But again, long term, I think they will be fine. Next, he has a Warren Buffett holding Bank of America, making up 1.63% of his portfolio. Again, I'm not huge on banks, so I personally am avoiding it. I don't just completely understand it, as I mentioned earlier. At the same time, Buffett owns it, so it must be something valuable in it. Next, coming at 2% of portfolio allocation, he has BlackRock, which literally owns like everything in the world. BlackRock's a very strong company, and I definitely do want to do more personal research on it and potentially adding it to my portfolio. Then he has 7.65% of this portfolio in cash, which I think is actually a more reasonable number. Then he has a small holding in Chubb. Then he has 1.25% of his portfolio in a company that I've recently just bought into, which is Costco. Costco's just an amazing company, and I've identified it as one of the strongest companies in the entire world. And I'm dollar cost averaging it into it right now. You know that if you join the Discord link in the description. Next, he owns Equinix at 1.86% of his portfolio. Solid holding there. Then he owns Google at 3.78%. I like Google and Microsoft there. I think Google, again, they have such a valuable asset with YouTube. I think over the long run, YouTube's going to be probably one of the top content consumption platforms in the world. Even though YouTube has done me dirty and not pushed any of my videos out, I do think that it overall is a great platform still. Next, he owns Honeywell, which is a very strong industrial company at 1.87% of the portfolio. And lastly, he owns Jeppy, and I have no comment on that. But again, just with these income ETFs, I'd hope he's using them as kind of like short-term leverages to get more capital and get more cash to expand into some higher quality positions, like Google, Microsoft, Costco, etc. So that's the entire portfolio, and here are my thoughts. So I overall think it is a very strong portfolio, a very great portfolio compared to a lot of other people in the finance, overall investing community for sure. There are some positions with that said that are riskier. I'm sure he's aware too of this because he's a very smart guy, Cody is. There are some riskier positions for sure, some lower quality positions of the portfolio that me personally, just long term, I'd personally just avoid. But Cody is a man of risk, I must say. So overall, I would definitely say the good severely, outweighs the bad. Very strong portfolio, so many great stocks in here, very strong. Overall, if I had to give it a grade, I would definitely give it an 8.7 to 9 out of 10. I know I give him a hard time for some of the lower quality positions in his portfolio, but really, there's a lot of very high quality positions and great stocks in this portfolio, and I'm sure he understands the risk in some of these positions. I'm sure Cody also will be in the comment section, so if you guys have any questions, leave them below. Also, let me know, what would you rate his portfolio out of 10? I'm going to go with an 8.9. Again, guys, thank you so much to Cody. A lot of, finance creators and people overall aren't comfortable sharing their portfolios. Some would even say it's private information, but people like me and Cody, we believe in transparency, showing the good times and bad. And of course, go check out his channel as well. A lot of similar, style content. Portfolio updates every month are the best in the business, so go check him out. He also has a Spotify podcast. And of course, guys, thank you. If you want to have me go over your portfolio, join the Discord link in the description. I'd be happy to do it. Thank you for making it to the end. Buy, stash, collect, clash, and of course, do dividend stocks, not drugs. Have a good one.